fixed rate, variable, open, closed, 3-year, 5-year. When it comes to mortgages, there is a lot to unpack. And thankfully, the experts at Affinity Credit Union can help. We're joined by mobile mortgage specialist Dawson Rowley today. Dawson, let's talk renewals. What are the keys when your term is up?
Yeah, so when your mortgage is renewing, you want to take a look at what the best option is for rates and what the best option is for a mortgage that'll fit you. There's a lot of different rates in the market right now that need to be looked at that are going to be, they've changed a lot over the last 5 years. So it's important to look at what the best rate is for you and what the best mortgage type is for you.
Okay, yeah, that makes sense. You mentioned that the rates, if you're looking at a 5-year renewal coming due, I know, because I'm living that life right now myself. Higher rates than 5 years ago. Equity, of course, is a big word that is popping up. How can we use the equity in our homes?
Yeah, so when your mortgage is renewing, it's a good time to look at what equity you have in your house and what access you have to that equity. So we can set up a home equity line of credit for you that will give you access to the equity you have in your home so that you can use it for other things down the road.
Okay, so when you're looking at that, how does that work? You want to set that up now at renewal, get what, a property assessment done?
Renewal is the best time to do it. We can usually do it through an appraisal or your tax assessed value. It depends on what the figures look like and what kind of equity you have in your home.
Okay, and you're not necessarily remortgaging, say, to that 80% threshold, but you're unlocking that as a potential secondary or tertiary loan or line of credit, is that?
Yeah, exactly. It's not equity that needs to be used, and if you don't use it, it's just there as an option. And you just have your typical mortgage on there at the beginning.
Okay, and then the benefit being then you're not paying posted interest rates on a loan or a line of credit. You're paying that same rate that you've locked in your mortgage for.
Yeah, that gives you the ability to get a mortgage rate on a vehicle loan or funds that you're going to use towards something else without paying that higher posted rate.
Perfect. Okay, and obviously secured then by your property and its value. Now, end of term is also a great time for shopping or switching lenders, and it's not just the rate that we need to consider. There's other fees if that's the route you're going.
Yeah, it's definitely important to look at the rate at other financial institutions, but it's also important to know what kind of mortgage suits you best. If you're somebody that wants to put extra payments down on your mortgage each month, a straight rate might not be the best option for you. You might be looking at a different type of mortgage. If you're making your standard payments and don't want to put extra, you want to go with that lower rate on the straight rate. It is typically how the rates line up with the mortgage type. When looking at different rates at different financial institutions, you want to be aware of fees that are charged to transfer out and different discharge fees along the way. So just something to look into when you're comparing rates at different financial institutions.
Perfect. And if somebody's looking to switch to Affinity Credit Union, you guys have a little bit of relief. You'll cover some, if not all of those costs?
Yeah, we have a mortgage switch program that's available. It'll cover up to $1,750 in associated fees. Certain fees along the way that we can cover to get that mortgage switched over to Affinity.
Okay, well, there you go. If you've got any more questions for Dawson, you can find him and the rest of the mortgage details at mortgages.affinitycu.ca. Thanks for a couple of minutes.
Yeah, thanks, Mike.